we have with us, as promised, Ajay Khandelwal from the Motilal Oswal Mutual Fund. He joins us on the sidelines of their 22nd Annual Global Investor Conference to discuss market fundamentals and his sectoral views. Ajay, thanks very much for joining us here. Let me just start with the earnings. It's been a pretty good quarter after several quarters of weakness, broad-based performance with a few exceptions here and there. What's the mood at the conference? I mean, what's the talk on FIIs coming back in a big way as well?
Yeah, hi. Thanks for having me. So I think after almost 6 quarters, we have seen earning upgrades. And this is across the board, actually. Nifty 50, for example, the earning is almost 300-400 basis point better. Same is true for NSE 500 companies. And the corporates are pretty bullish. So when we are talking to them, there's this feeling in the market that whether because of the raw material price increase, is it that the demand is going to slow down in subsequent quarters? But the feel that we are getting is that the demand is pretty robust. And there's a lot of interest in the companies that we are meeting. Same is true with FIIs also.
Ajay, the biggest sellers that FIIs have been in has been financials. I mean, look at some of the performances, especially the large private banks. They've lagged the markets. Do you see that reversing now? These FCNRB flows expected to pick up end of the month. Some of these private banks are doing pretty well there, although foreign banks have had an incrementally larger share. Do you see some sentiment reversal there? What will be the near-term triggers?
Here, our view is that there is a clear growth differential between large private sector banks versus NBFCs. And I mean, after a long time, if you see, even the PSU and private growth rate are kind of now converging. So there was a concern about liabilities in the market, but with this strong FCNR flows, we believe liquidity won't be a challenge, and asset quality is holding up very well. So this is a time where the financials which will demonstrate higher growth, interest would definitely be there. So from that perspective, we believe that NBFCs that way will continue to do well.
Does the same theory hold for PSU banks as well? Because you're hearing from the finance minister at the PSB confluence that the high-level committee on banking reforms is likely to be announced soon. And we have seen one round of consolidation within the PSU banks. Do you expect further consolidation to come in, especially considering the fact that the Prime Minister has also asked for larger banks in his Independence Day address? Whether PSU banks or private banks, where would your preference lie, Ajay?
So see, as a house, we are, I mean, for PSU is something where we are not invested. But fundamentally, if you ask me, the kind of GDP growth that is there, the kind of capex from the government side that has happened, we are seeing not just working capital, even the term loan demand is coming back. Asset quality is holding up well. So I believe that credit growth will be fairly good with robust asset quality. Even PSUs, I believe, will do well. But as I said, as a house, we are more bullish on NBFCs.
Right. Ajay, there has been this one hope that after this result season, there might be some bit of flows coming back to the Indian IT sector, especially considering the meltdown that you have seen in a lot of the semiconductor stocks back in South Korea and even in the US, although that has now ebbed as well. But is the worst over for Indian IT? And even if the worst is over, are better days still far away for you as a house?
So, see, this is a question which I think is asked time and again. But I would say now there is clear semblance coming about not how far the AI opportunity is, but actually what can be the return on capital finally would be on AI. So that, because of that, we are seeing now companies are asking what kind of actually improvement that can come because of it. And Indian IT, even this quarter, for example, a lot of them have they have come out with what kind of AI revenues coming, what percentage of revenues from the AI, how they are benefiting out of it. So how it happened with last two cycles of when the ERP implementation happened and then subsequently in 2015-17 when the cloud cycle adoption happened, we believe that even in AI now, when things are normalizing, Indian IT services companies will start seeing the improvement. And some of the Indian IT companies have actually taken that initiative and they have gone and acquired the skill set to be more relevant in this AI trade. So we are seeing now that there is more questions asked about now the return on the AI investments, and that is where Indian IT, I think, will make a lot of difference. This quarter, we have seen the earning, at least in large cap, mid cap, the earning deliveries at least in line or better than the expectation. So we are seeing that IT as a sector is now started to do better than the expectation.
Indeed. So, Ajay, in that case, where are you finding value currently? Because the market has gone nowhere over the last 12 months, 18 months. But there are pockets within the mid caps and the small caps that are at record highs, that have delivered substantial returns to the investors. Where is it that you are recommending your clients to put their money to work?
So see, for us, we are looking earnings in terms of two baskets. One is where you have these new tech companies, the high growth coming from whether it is fintechs, the EMS players, which is like towards the new technology, and the growth longevity will continue there. And the other half is more traditional earning basket where you have the pharma, auto, for example, is doing exceedingly well. Other manufacturing part of the market, for example, capital goods. So for these two baskets, I think the growth is fairly strong, and our portfolios are mainly positioned to capture both these two earning baskets. So from that perspective, I think these are the sectors which are doing well. And from near to mid-term perspective, I would say that we are really trying to understand how this, if there is a channel inventory which is this quarter, if it is filled in, then how subsequent quarter demand is going to be. Because this quarter, what has happened is even after the raw material price increase taken by the companies, the underlying demand has held up very well. So from our perspective, I think these two buckets we are looking at, and we are just trying to make sure that the channel inventory is in place, so even the subsequent quarter earnings are going to hold up.
Pleasure having you today, Ajay. Thank you so much for sparing time and joining us today from the sidelines of the conference. Wish you good luck for that entire duration as well. That was Ajay Khandelwal there of Motilal Oswal Mutual Fund.